Hello, everybody, and welcome to the Yacht Banker. My name is Peter Jones, the Yacht Banker. And in today's video, I wanted to talk about the interest rate outlook for the remainder of 2024. But first, just a little housekeeping. We're actually in the middle of building a new studio. I spoke with the contractor, and he said that we're about 2 weeks away from completion, so that's the good news. The bad news is he told me that 2 weeks ago. So when it'll be done, I don't know. Here's what it looks like now. You can see that there's a lot of mess. What they've done so far looks good, but still a lot more to do. So when we'll have the new studio, I have no idea. But let's get into today's topic. So there are a multitude of factors that affect interest rates. And at the end of the video, I'll talk about what the outlook is for the remainder of the year, what we can expect, and through the first part of 2025. One of the biggest things affecting interest rates is inflation, and that is because the lenders know that due to inflation, the money that they are paid back in the future is going to be worth less. It's going to have less purchasing power. So they take that into account and they raise the interest rates up front, expecting that lower rate of return down the road. One of the other factors that affects interest rates is the basic economic theory of supply and demand that we all learned in school. As there is an increase in demand for borrowing funds, then the price of that borrowing goes up. If there's a decrease in demand, then like anything else, the price goes down. So as more and more people, businesses, governments want to borrow money, that also fuels the increase in interest rates, as does inflation that we just spoke about. Now, one of the biggest drivers to interest rates that we pay is, of course, the Federal Reserve. And the Federal Reserve is comprised of three key entities: the Board of Governors, 12 Federal Reserve banks, and the Federal Open Market Committee. Now, what they do is they set the rate at which banks can borrow money. So currently, the rate sits at about 5.25%. That's why you're seeing a lot of banks pay interest rates on savings accounts close to 5%, because they then borrow that money cheaper than what they're paying at the Federal Reserve. Now, the Fed is supposed to meet July 30th through 31st, and that's next week based on this filming. And it is expected that they're going to leave rates at that 5.25% to 5.5%. They're waiting for inflation to ease some more. So that means we can expect interest rates for right now to stay about where they are. We really don't expect to see any movement either way. Now, could that change? Absolutely. World events can change that. We're in an election year, so that obviously changes and can impact a lot of things that the Federal Reserve looks at down the road. Now, other factors that will affect interest rates are more consumer specific. Those are going to be your credit score, your credit history, your type of employment and your income, the size of the loan, the loan to value, so the asset you're trying to borrow, the boat that you're trying to borrow, and how much it's worth. Like with a house, if you're in a really good equity position, it means less risk to the bank, so your rate's going to be a little bit lower. The loan type, the type of loan that you're doing, the length of the loan, the term, and then, of course, the payment frequency, how often the bank is going to be receiving funds. All of these, in combination with what we've already talked about, will drive interest rates that you end up paying on a loan. Now, for the remainder of this year and through the first part of 2025, we expect interest rates to remain flat. Before in 2025, we think they may begin to drop. As we talked about, the Fed meets next week. We expect rates to remain constant, so we don't expect to see any changes. They're waiting for inflation to ease a bit, and we don't expect to see that until Q1 of 2025. So at that point, that's where we think that we may see interest rates drop. But as with anything else, none of us have a crystal ball. Anything can change. Like I said before, it's an election year, so you don't know exactly how that's going to impact things that far down the road. So as interest rates may drop in 2025, of course, the opposite can happen and they may go up. So if you are looking for a boat and you are looking to finance that boat, You can finance it now. You'll know what the interest rate will be. If it drops, then you can refinance without any kind of prepayment penalty if it makes sense. And of course, if interest rates do go up, then you would have taken advantage of a lower interest rate right now. So we hope that you found this video informative. We urge you to visit our website at www.theyachtbanker.com, and we look forward to seeing you in the next video.